And to speak of that, Pete McGuire, Chief Executive of XM, joining us now live. Pete, a very good morning to you. So, yeah, making a bit of a joke about inflation there, that everyone sort of shrugged it off, but it's still eye-watering, isn't it, given where it is at the moment?
Absolutely. Good morning, Andrew. Good morning, Annette. Yeah, when I look at the Fed numbers over the last quarter, the Atlanta Fed point to around about 8.7%. So it's sizzling hot, Andrew, as far as inflation. And if that's what the new normal is, then maybe by February, you might be sitting at around about an 8 handle for the year. And that really would create much turmoil, I think, for the Fed moving forward as far as rates, as you said, creeping, bringing them back. And we might get, 3, 4 or 5 next year. Who knows?
So I guess we know the Fed's coming up. It's dot plot time. We spend way too much time looking at these damn things. But nevertheless, if it sanctions the market pricing, will the markets do what they do best and then price the next step up?
I think so, Annette. They'll be baked in, and then the next part of it, as far as where the US dollar plays, is the first part and how quickly they're rolled out. So, the general mood, I think, is one of nervousness from currency traders, where that US dollar heads higher to. We're sitting at around about that 96 point, or pardon me, 95, 96, high 95s. And that's the issue. Where does it roll over the next, 3 to 6 to 9 months? Do we hit 100?
Now, as you say, of course, the Fed is heading for the exit. What kind of strategy could we get on the tapering side? We all know they're tapering. Could they double down and just, instead of 15 per month, pull back, make it 30, for example? Let's get going.
Absolutely, I think that's the firepower that they'll probably throw it, and the reason is quite simply because of that high inflation number that really must spook them, 40-year high, and that creates, again, much pain to Main Street, mightn't pain to the big Wall Street titans, but if you're on just a salary and you haven't had a wage rise, then your cost of goods, everything has gone sky high, and we've spoken over the last few weeks together, Annette, as far as the cost of fuel, the cost of food, and all of those daily consumption items that the consumer buys, and really you're getting far less bang for your buck.
Yeah, so if they actually hasten that cut there, they could end up finishing around March. So that's certainly a lot earlier than initially expected.
Well, that's right, Andrew. And then the next part is, do they wait till July or June to bring those rate rises, or do they get off the, it move far quicker and far more aggressively? And I think that that's where, many traders are thinking. And you've heard people say you're going to see 2 next year, 3, and then how many further are you going to see over that? You've got some analysts saying you could see as many as 5 rate rises in the year of 22, because to contain inflation. The other side, of course, is the stagflationary, and are those numbers the real numbers as far as growth and what we're expecting in 22? So, there's a lot going on. You've got other central banks meeting this week. You've got the UK, Eurozone, Switzerland and Japan as far as rates. So it's a big week. It's a lead up, and I think hopefully Santa Claus is still coming to town.
We certainly think so. In terms of the ECB, is it a battle between the ECB and the RBA as to who wants to be up the back of the pack? Is this the ECB's chance to just go, we're not tapering, we're not even talking about tapering?
Well, the issue there is you've got PMIs that are weaker than what they probably forecast. You've got the issues in what's happening in Germany and Austria at the moment as far as, political comments. So how's that going to run forward leading into 22? And I think that we're heading into a summer and they're heading into a bleak winter. So hopefully that we're a little bit further along the curve than what Eurozone is as far as growth numbers. And I think that we'll be the first cab off the rank before the ECB.
And Pete, across the channel there, of course, speculation they were going to raise rates, I should say, a couple of months ago. Just it hasn't eventuated. But of course now they've got, you talk about going into a bleak winter. Those case numbers are rising substantially, although perhaps hospitalisation rates pretty steady at this point. So that is encouraging. How are you seeing the movement as far as the BOE is concerned?
Well, I think that they'll keep their hands very close on the wheel. I'm not expecting any surprises. I think they've got weaker growth numbers heading into 22 as far as if you look at their PMIs and their GDP numbers. So it could be their good sign, of course, has been the strength of the pound sitting at about that 132.5. So it's well down from its highs, 138s, 139s, 140. So that's given back a fair bit. So from a currency side, it's been advantageous. where we run, I think they're just keeping their eyes very much across the channel. Look what happens as far as ECB, what happens across the Fed, and they're just waiting to see what happens with those big movers, being Japan, being Switzerland, because remember, they're the two that really have got to keep an eye on because they're in negative territory. So do they come back to an even keel, or what do they do? So it's going to be an interesting couple of days ahead this week.
Isn't it a tough one for the Bank of Japan? I think we've been sleeping through that for about 15 years now. I certainly get that. But the Swiss National Bank are not happy with the currency where it is. We've had a volatile year. Everyone piles into the Swissy and the yen. Could we get some fireworks from the Swiss bank?
I don't know whether we'll get fireworks in it, but I think we'll get a fairly decisive mood, and they've got their own agenda naturally to protect their own currency, and they're concerned as far as the strength of it and also the uncertainty with the other trading economies within Europe. So there's the storyline, and I think at the moment it's just it's a little bit of brinkmanship, who's going to do what, when and how, and all central bankers are keeping their eye very much on that inflation number, because it's just not America that's feeling inflation, it's the rest of the world that's really eating it up as well. Higher energy costs, higher food costs, and all the other components that make the spending power of the wallet and the purse crimped each week.
And Pete, currency-wise, the Aussie made an impressive comeback last week. Where do you see that going? Is it going to push beyond 72? Well,
Andrew, you said during our last Monday, you mentioned that it hit about 69.98 or so, and so it broke that 70, and now we're sitting at 71.61. So yeah, it's had a nice move to the upside when you're thinking about a percentage term, and then I think it's got the potential to probably edge a little bit higher. We might see a 72 handle broken by Christmas. I wouldn't be surprised on that. It's bouncing, it's volatile, and that's what traders want. They want that movement, and the currency is certainly demonstrating that from a opportunity standpoint.
Yeah, currently sitting at 71.6 US.
And even though we've got all the big guns we were just saying in terms of central banks, the RBA is speaking on Thursday, and I know the currency loved the fact that sort of 2023, 2024 has sort of quietly dropped off the rhetoric. Could that be reinforced on Thursday and give the Aussie a lift?
Well, it could be, Annette. I think they're keeping their eyes on what the big five are doing, and then if there's going to be big movement to the upside as far as the Fed coming out of the blocks and trying to contain inflation, if we've got a number sitting in February sitting at 8% or 8% plus, which I think will happen. I think if you've got 8.7 in the last quarter, there's every reason that you'll be at 8 plus by Feb. So I think that all the central banks will be moving with a far more aggressive stance, probably a little bit like politicians. Do you really believe them? So let's wait and see what happens. If I recall Jim Rogers' thoughts, he doesn't believe any of those numbers that come forward. He just trades the market, and I think that that's probably the way that most traders are looking at it at the moment. Don't believe the hype.